Hello again, this is TJ Noon for netpicks.com. Welcome to the Universal Market Trader. Today we're going to look at swing trading the corn markets on the daily chart with the UMT Advanced Tactics. Corn is a trending market and produces some great, bigger, longer-term moves. We're going to start at the beginning of 2007 and just track the trades up to the current date. We're only taking the traditional setups, and we're also going to take pullbacks into the solid bands. I'll point out some pullbacks into the dash bands. I do believe there are some additional good trades, but you would need to do your back testing and come up with the right parameters as far as how you would manage those trades, and that's beyond the scope of this particular video. But we'll go ahead and visually see some of those setups, and hopefully that'll pique some of your interest to actually take a look at maybe adding corn to your swing trading repertoire. So let's just jump right in and see how it did. Each point is worth $50. That's 1 penny's worth of movement, and it trades in quarter penny increments. So a tick is worth $12.50, much like the S&P E-mini. So here we have our first trade on February 2nd, 2007. Actually, that's when it sets up, but once we apply our incremental entry, it actually doesn't trigger in until a week later on the 9th. And it goes straight to target. And it picks up a nifty 25 points. So actually that made us $1,250. And we do get a pullback into the solid bands here, but it never triggers in. Instead, we get a short setup, and our target is before the directional. So we could take this trade, and that one goes straight to target also, and that one gets a nice almost 20 points, $987 on that trade. So 2 winners. And here we get a little bit of chop, and it actually looks like it's kind of consolidating and that it's going to break lower. And we do get a pullback into the deeper bands here. That one triggers in. And remember, we're going to put our stop right above the swing level, so that one stops out and we take a loss for $1,175. Then we get a regular setup here with a new hook. You can barely see it, but it's there, and that one triggers in, and it looks like it's going to break lower, but it doesn't. So we get a couple losses in a row. That one losing $1,475. Just barely triggers in here and doesn't get below that last swing low. A little bit too far to adjust. And so we'll go ahead and take that as a loss. Come right back though. Actually, it looks like we come right back. This trade took place on May 5th. We come back on June 7th, a month later. And we pick up this long trade, and that one gets us $1,050 per contract. Then it finally breaks lower, so we kind of get a false breakout to the upside, but we're able to take advantage of it. And then it breaks lower, but unfortunately we just don't have a legitimate setup. If this bar was touching one of these bands here, we would have had a setup on this bar, but we weren't able to pick up that short, which is unfortunate because it had nice movement. And then the system does a nice job of keeping us out of a couple shorts. This one here and this one here don't trigger in, and we're able to get this long, which moves back towards the directional, and we pick up $800 on that. And a lot of time has passed. This is several months later. This is September 14th. And these are trades you're just going to, every now and then you'll enter an order, and then you'll have to monitor these trades. It's a slow-moving, longer-term swing trade, but I hope you can see how profitable it is. I've only had 2 losses so far. Here's a winner. Now this one here, the entry is just below the directional, so you make a little bit of an adjustment above, and you still have a favorable risk-reward ratio. So that's a valid trade, and that one makes almost $1,000, about a quarter penny shy of $1,000. We get a pullback into the deeper set of bands here, just barely touching, and so we're going to take that trade, and that trade gets us another $1,050 per contract, and a really nice move here. And if you do your homework and your back testing, you may even decide there will be certain circumstances when, if you trade maybe multiple contracts, you might actually want to trail a stop. Maybe use a 3-bar stop, for example. And you do see some pullbacks into the shallow bands, and if you click on these, you do get setups, and they're hitting their targets, but these are trades that are optional. They're more advanced, and again, it requires back testing, so we're not going to count those. Then we get a new hook here, and this one is a long and goes straight to target. And again, just checking the how long it takes. March 27th of 2008 is when it sets up, triggers in the next day, and it actually hits its target on April 9th. And that's a nice $2,275 trade. Come back with another. Here's a short that never triggers in. Here's another long. And you can see how this trends. $1,525 on that trade. And then we get a short. And this comes quite a bit later. We're already in September of 08. And that's a nice big trade there. This trade getting all the way down to its target. We ignore this setup here. I mean, optionally, you could decide to go for the smaller target. For the sake of this video, we just went for the original targets. This one gets us $4,275. So now we're looking for our next trade and rolling forward, and you can see again these shallow pullbacks into the lower bands seem to set up really nice continuation trades, and that's worth taking a look at, I think. We get a long on December 30th. I'm not sure if this is a trade I would take through the holidays. I probably wouldn't. I'd be coming back January 5th. But I went ahead and counted this anyway, just to be ultra conservative on this video. That one losing $1,100. We have some stop management. It got past the 1x and then pulled back down, so we were able to move our stop up below the low of the setup bar, cutting that loss. And then the current trade, this one triggering in to the short side here. It took some heat, but the stop held. It came back down. That was on February 2nd, and it's come down to the 1.5x, and we've moved our stop now, cutting risk a little bit above the entry. We want to work around the swing level, and so we'll see hopefully that this trade works out for us, and we are trying to get to 335 and a half, or 335 even. And if that trade works out, it's going to make about $1,400, close to $1,500 in profit there. We'll just have to wait and see. So all in all, it was a very successful couple years swing trading corn. Just looking at the basic setups and pullbacks into the deeper trend lines, produced 11 trades, including the one that we probably would not have taken on December 30th, for 8 wins and 3 losses. And we had $3,750 worth of losses, but we had $13,412 worth of winners. And that producing just about $10,000, give or take, per contract. And again, if we were looking at some of those other optional trades with the shallow, the pullbacks into the shallow bands, we could have really taken advantage of some of those bigger trending moves. And even though there may have been a loss here and there scattered about, I think it's plain to see that there could have been quite a bit more winners. Corn is an excellent swing trading market. You just have to make sure that you're adequately capitalized and that you're keeping your risk to that 2% range. So this is a market that is going to require a larger account size. But it is something to aspire to, and at some point you're going to probably want to add swing trades to your trade plan because it could really produce some serious profits. And when you have something like the universal market trader that produces such a strong edge in the market, at some point hopefully you're going to want to have that in your plans to take advantage of the edge that it gives you and look at some bigger term trades. Hope that was enjoyable and that everyone learned something from that. This is TJ Noon for netpicks.com, and we'll see you next time.